Hello everyone, thanks for checking out my video. Before I go on, just wanted to inform you guys that there will not be any market analysis video next week as I will be traveling. But I have prepared a video on options wheel strategy in place of that. Meanwhile, are you able to guess where I am headed based on this picture? Anyway, wow, last week's stock market performance was nothing short of impressive. Nvidia, the key player in the AI boom, reported remarkable earnings and guidance, which saw its market value jump by around $277 billion in just one day. And to put it in perspective, this increase in market cap is larger than some of the biggest blue chip companies such as McDonald's, Starbucks, Coca-Cola, and Walt Disney. The rally was also the biggest single session increase for a US company in history, surpassing the record set by Meta just less than a month ago. Nvidia's solid earnings also pushed the S&P 500 to its 15th record high in 2024. It seems like this AI and Nvidia-led rally is showing no sign of stopping. For those who are not invested in Nvidia and other AI-related stocks, are you feeling the FOMO? And is it too late to enter right now? Let's discuss more in this video, so do watch on to find out more. Last Thursday, Nvidia reported earnings and guidance that smashed even the highest expectations by analysts. The impressive results sent the entire stock market soaring, with both S&P 500 and Nasdaq recorded their best single-day performance since 1 year ago. As shared earlier, the single-day rise in Nvidia's market cap basically eclipsed the entire value of the 138-year-old Coca-Cola, whose current market value is around $264 billion at the time of recording. To add on, according to Bloomberg, this more than $275 billion jump in market cap is by far the biggest single-day valuation gain in Wall Street's history. The previous record was set by Facebook parent company Meta just not too long ago, about a few weeks ago, when it saw its market cap jump by nearly $200 billion following its solid fourth quarter earnings report. On top of that, Nvidia's value briefly hit $2 trillion last Friday, making it the first chip maker to cross this milestone. It is also the third US company to reach this valuation, right behind Apple and Microsoft. Just to also share, back in early 2022, I have done a video on 5 stocks to hold for the long term, and that includes Nvidia. At that point, Nvidia's market cap was only $700 billion. And I shared that Nvidia will be on its way to hit $1 trillion mark in that year. Fast forward 2 years later, Nvidia has doubled that valuation. Anyway, I have linked that video at the top, check it out if you want to, and you can see that at that point, Nvidia was already firing at all cylinders. Anyway, apologies if this entire section of the market recap seems to be focusing on Nvidia only, but that was really the case last week, as the market totally ignored all the macro factors such as interest rate, inflation, labor market, and whatnot. It was all about AI, Nvidia, big tech stocks. But moving forward, as we enter the month of March, will this AI frenzy continue? Will the attention be shifted towards the Federal Reserve fight against inflation and their interest rate cut campaign? Well, the AI craze will definitely not go away, but this macro stuff will also definitely come back into picture again, especially when the earnings season is coming to an end. But to what extent will these various macro factors move the stock market? Nobody knows. Anyway, we have another inflation test coming up this week with the release of January's PCE price index on 29 February, Thursday. This is the so-called Fed's preferred measure of inflation, as they try to bring inflation back to 2%. So if the inflation continues its downward trend, then it could provide further catalysts for the market to move up. Other economic data and events to watch for this week includes consumer confidence, consumer sentiment, initial jobless claims, as well as a few Fed officials will be speaking. For the upcoming month, do also pay attention to the bond yields. In case you're not aware, the bond yields had quietly going up for the past few weeks, but the market has been ignoring it because of the various strong earnings by the biggest US company. With the earnings season fading in coming weeks, the spotlight could turn back to this, as well as other macroeconomic pictures. Again, in case you don't know, high bond yields tend to pressure stock valuations as investors find it more attractive to invest in bonds, which are safer assets per se as compared to stocks. Also, if the upcoming inflation data comes in hotter again, it may force the Fed to delay their rate cuts even further, and bond yields could continue to rise. Let's now move over to the technical analysis section. So in my last video, I shared that if SPY bounces off the first support level of 494 convincingly, more FOMO buyers may step in, and if it breaks the recent high of 503 with strong earnings from Nvidia, SPY stands a very high probability to hit 510. Ladies and gentlemen, we kissed the exact level of 510 last Friday. For this week, quite straightforward. Basically, watch the 510 level again. So what happened last Friday was that SPY briefly touched this level during intraday, but it got rejected. And given the AI craze, I think SPY could test this level again this week. But I must highlight that this level is a big resistance level because it is where the important 61.8 Fibonacci extension level is. However, this also means that if somehow SPY can break above this 510 level, it is free flying for the index. It may just charge towards 521 before the next resistance comes into picture. On the other hand, if institutions start to take profits this week, and with 510 being a heavy resistance level, then we could see SPY getting rejected here and decline to fill that gap between 497 to 503. From here, as per what I have shared in my last video, watch for 494 as the first decent support. But even if this level gets breached, don't be too alarmed yet, because SPY may just want to retrace to test the green dotted uptrend channel line, which is roughly at 490. This is also where the next Fibonacci level sits. Okay, in my view, it is only when SPY starts falling back into that uptrend channel, then we could potentially say that buyers are drying up a little or investors are taking profits off the table. However, there is still no need to panic or be too concerned yet, because to me, as long as SPY stays above the 50 moving average and the 61.8 Fibonacci level, basically 480 to 483 area, we are fine. Just to also share, from the current price point of 507 to 480, that's only a 5% drop. If we get this kind of decline in the next 1 or 2 weeks, I will want to step in to snap up some shares, be it S&P 500 or some of the big tech stocks. Let's now jump over to Apple's chart. Apple looks bearish to me with the big fat red candle last Friday. It looks like a bearish engulfing candle actually. And as you can see on the chart, there are two downtrend lines. The blue one represents mid-term, while the purple one represents short-term. In short, Apple's both mid-term and near-term trends are bearish. Come this week, watch the 179 to 180 area very carefully. I think I have shared this before, but as a recap, this is one area where Apple kept bouncing up whenever it came close to it. In fact, the bounce happened again last week, making it 4 times in the last 1.5 months. This just shows how critical this level is. Another key level to watch is the 200 moving average. I have also shared multiple times about how this moving average has been the key and strong support since Apple started this monster rally back in January 2023. There were a few occasions where the stock went below it, but it was only for a brief moment before it bounced back up again. So once again, we saw that happening last week. Okay, this is my personal view. I think this or next week could be pivotal for Apple. Why so? Because it has been a tug of war between the bulls and the bears around these key levels, and I don't think it would be long for either of them to emerge as a winner, at least for the short-term trend. Okay, so if Apple breaks both the 200 moving average and the 179 to 180 area, it is very bearish in my opinion. Below 179, we could see Apple slowly grind towards the low 170s range. On the other hand, for Apple to reverse its current short-term bearish trend, it needs to break out of the purple downtrend line convincingly. Okay, so what does that mean? It means we need to see Apple climbing over 185, filling that gap at 186, and staying above it. If we can achieve all this, we then have a very high chance of hitting 190. From there, if Apple can break above the recent high of 190.8, the next target for the bulls would be the blue dotted midterm downtrend line. Let's now move over to Tesla. Tesla is obviously in a consolidation phase as it moves between sub 180s and low 200s. Just like Apple, we are having a tug of war here as the bulls are facing difficulty filling that gap, while the bears can't seem to bring Tesla below 180. As I will be away this weekend, I believe by the time I'm back and by the time you hear from me, Tesla could have found a new trend. So how do we look for confirmation of the new trend? Well, since Tesla hit the recent low of 175, the good news is that we have been creating higher lows, and it is moving in this mini uptrend channel. You can try drawing it on your chart and use that as a reference in the next 1 or 2 weeks. So if Tesla continues to move within this channel, then the next potential movement is towards the top end of the channel, which means we could fill that gap between 203 and 206. Okay, to be honest with you, I thought Tesla could try to fill that gap last week, and I was wrong. So let's see if it can do it this week. If it can do that, don't be too excited yet, because the top end of this gap coincides with the top end of this mini uptrend channel, which I will give it a range of 206 to 210. This is where I think we can expect some form of resistance. It is only when Tesla breaks above this area, then it is slightly more bullish. From there, it may well charge towards 220. If Tesla can break above the blue downtrend channel with solid green candles, then I will say Tesla is very bullish. By the way, if it's not too much of a tall order, could you help me and help this channel out a little by tapping on the like and subscribe buttons? Share this free content with your friends too, as I aim to hit my milestone of monetizing this channel. In case you're not aware, to fully monetize the channel and earn ad revenues, I will need 1,000 subscribers and 4,000 watch hours in the last 365 days. As you can see, I am still 400 hours away. Also, if it's within your financial means, do consider buying me a super thanks on YouTube or a cup of coffee via my Ko-Fi link. Okay, on the other hand, if I am wrong again, I always stand corrected. If Tesla once again is unable to even try to fill that gap, then that spells bearish. If I want to put a level to watch for the bearish thesis, I would say 196. As long as Tesla is unable to stay above 196 where the Fibonacci level is, Tesla is not anywhere near bullish yet. In fact, the further it drags, the more likelihood it will fall out of this mini uptrend channel. From there, bulls will have to defend 180, man. Just to share again, even when we hit 175 the other time, it was during intraday, as Tesla managed to close above 180. So if we ever close below 180 this or next week, a message to the bulls out there would be, take a back seat, watch how Tesla moves from here. Don't be too eager to buy the dip yet, because in my view, I think we could slide towards 160s or 150s range. And oh, just one last thing to highlight, the Bollinger Band is squeezing. If you have followed me long enough, you would probably know that whenever the B-band gets squeezed, the next movement is likely to be a huge one, so brace for impact. Moving over to Google's chart. Similar to Apple, Google is also at an area where there are multiple key levels to watch at one go, where the bulls and bears are fighting against each other. So let's talk about the bullish thesis first. So Google bounced off two important levels last week, namely the 50 moving average and the critical 61.8 Fibonacci retracement level. Not just that, it also bounced off the Ichimoku cloud. On top of all this, it has created 4 consecutive days of higher lows. All these are bullish signs. For the bullish momentum to continue, it needs to get back into that green uptrend channel. Once inside, then we have a decent probability to head towards both gaps. Yes, both gaps. To be honest, once it goes back into that channel, it is almost inevitable for the first gap to be filled, which is at around 146 to 147. I would expect it to go towards 149 and 150 area actually. The gap at the top is around 149 to 151. And if, let's say, if Google doesn't get rejected at the top end of the gap, which is 151, I think it's quite likely for Google to create another new record high, as the bulls may take it towards the top end of this uptrend channel, which is above 155. Okay, despite the various bullish signals that were displayed last week, be mindful that market can change quickly. First and foremost, watch how Google reacts to this bottom trend line of the uptrend channel. It is currently kissing it. And if Google gets rejected, then watch for 141. If 141 breaks, then the momentum has turned bearish, because that will mean that the 50 moving average has been breached as well. From this point, I would expect Google to head towards the recent low of 136, and it has to bounce from 136, because if it doesn't, I would think it may slide to 131 or 132, where the next support level is. Okay, let's now move over to the options trading segment. Last Friday, 23rd February, I sold a new cash secured put on Tesla with a strike price of 160 expiring 5th April 2024. As you all know, cash secured put is a slightly bullish move. Looking at the chart, Tesla is in this small little uptrend channel, which I have shared earlier in the TA segment. This means Tesla is still leaning towards the bullish side, at least for now. And even if Tesla falls slightly out and below of this uptrend channel, it is still not too concerning yet, because overall, Tesla is still moving in this consolidation range. As I have always shared, consolidation is good for option sellers because of time decay. However, we must always be prepared for the worst. So if, let's say, Tesla bulls cannot keep up the current bullish momentum and it doesn't only fall slightly out of the uptrend channel, it basically drops below the important support level of 180, then how? Panic? Well, relax. So below 180, I know I mentioned there isn't much support all the way to 160s and 150s range. This is why I chose a strike price at around this area. In the 160s range, there is actually a small support around 165 to 166. But I got to be honest, I am not putting too much hope on this level. If it holds, well and good. If it doesn't and my 160 strike price gets breached, I am prepared to get aside and then sell covered calls to milk more premiums, aka the options wheel strategy. If you don't know what this is, check out my video link at the top. Next up, I have this cash secured put on Tesla that is expiring this Friday, 1st of March. The strike price is 170 and the contract was sold on 18 January this year. Back then, the RSI indicator has reached an oversold level and the stock has already dropped 14%. In order for my strike price to get breached, Tesla has to drop another 19%. It wasn't impossible, but the odds were low at that point. Okay, for more information about my thought process, it can be found in the video link at the top. Do also stay subscribed if you don't want to miss any updates. Anyway, guess what? Tesla fell and plummeted shortly after I sold the put option and went as low as 175, but my strike price wasn't breached. So that's the beauty of selling options. because you don't have to be 100% right, you just have to be approximately right. So 1 week after Tesla had the huge gap down, the stock price stabilized and have been floating around the 180s to 190s range in the last few weeks. If Tesla doesn't fall to 170 this Friday, my contract will expire worthless and I will get to keep the full premium of $200 without having to close the position. Alright, some end thoughts before I take a break this coming weekend. Well, by now we all would have already known that the latest record-breaking stock market rally is due to the future promise of AI, and also thanks to the magnificent results reported by the AI poster boy, Nvidia. With the red hot rally going on, there always be this question floating around: is this a bubble in the making, or is it a start of a boom or a revolution? Okay, in my personal opinion, I think it's the latter. I believe we are going through what we call a revolution. AI is basically going to bring great changes to the world, from your daily lifestyle to your work. It is going to affect a lot of things and industries, like how you shop, how you work, how you live, etc. But going back to the stock market, just like any revolution in the world, there will be companies that stand to make the most money out of it. And for sure, we now already knew that Nvidia is the greatest beneficiary of this AI boom because they provide the most advanced GPUs needed to power the various AI technologies, such as generative AI platforms, large language models, etc. This therefore makes Nvidia probably the most important company in the AI boom and the most important stock in Wall Street. It perhaps is the world's most crowded stock right now. So is it too late to snap up more Nvidia shares? Well, I guess the simple question to ask yourself is that how much do you believe in this AI revolution? Will the world continue to demand Nvidia's chips and GPUs in the next 10 to 20 years? If so, then for sure their revenue is going to grow further at a rapid pace, and with that, Nvidia's present valuation could look cheap, because it could surge past $1,000 if that's the case. Okay, this is not a financial advice, alright? But just to share, Nvidia may be the one providing the tools to achieve the revolution and transformation, but clearly they are not the ones doing it, at least for now. We have to look at the end users of these GPUs and chips, as in who are the ones putting these chips to good use, who are Nvidia's customers, who are the ones creating the AI technologies that are going to change the world. It's the tech firms, both the big and the small ones. That's where the other opportunities lie. But before we get all too excited to go all in into these AI related companies, the problem, however, remains the same, which is that valuations are getting stretched because market is forward looking. They are pricing in all the growth and hype in the upcoming quarters or a few years. So any slight weakness in any of these companies could see a 5 to 10% pullback, or even more. I mean, that's how the market works. That's the thing you have to face if you wish to invest in growth stocks or a booming industry. Therefore, if one is unable to stomach the short-term volatility, maybe it's better to invest in the blue chip stocks that I have earlier mentioned, such as Coca-Cola, Starbucks, and McDonald's. In my personal view, if you are a long-term investor and your time horizon is long, say 10 to 20 years, and if you believe that we are at the start of this multi-decade AI revolution, then the near-term 5 to 10% drop could probably be a blip in the grand scheme of things. I am also of the view that the near-term momentum in AI-related stocks is likely to continue. But how long will it last before we get a significant pullback? It's always the biggest question in everyone's mind. It could come this week, next week, or next month. But again, all I can say is don't be too affected by it. Just let the market take you where it wants to go. And obviously right now, that's higher. And then keep the pullback at the back of your mind so that you don't get spooked out when it happens. Alright, that's all for this video. I will see you in the following week when I am back from my trip. Meanwhile, please help me grow the channel further by liking and subscribing. Thank you.